Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We've been coming to you live from the Nasdaq and Villanova School of Business ETF Synapse, where we're focusing on research and academia. Joining me for this segment, we have Claire Dannhauser. She's Assistant Professor of Finance at the Villanova School of Business. It's great to have you here with us today, and thank you for co-hosting with us. Let's talk about some of the topics that you're covering in your panel and about the collaborative research atmosphere that we have today.
Well, thank you, Nasdaq, for hosting this. It's been
Thank you.
a wonderful opportunity to show off my hometown of Philadelphia. But what we talked about in my session was corporate bond ETFs. And corporate bonds are very important to the economy and to investors' portfolios. Why? Because they fund firms' investments. They're able to get new projects going because of debt financing. It's cheaper than equity financing. However, the market historically was dominated by big institutions and didn't trade very often. And this illiquidity posed a problem for people trying to change their portfolios. When you wanted to trade, traders could have just closed up shop. And now we have this new innovative product that cheaply, with transparency, provides access to this really important market.
Well, it's interesting because the bond market structure is transforming. It's becoming more of an electronic market. Is that going to help with ETF trading and investing?
So it's becoming more electronic, but at the same time, it's becoming more liquid. There's an emerging line of academic research that shows post the crisis and post all these regulations, the people that have the ability to stand there and buy or sell inventory have actually retreated. And so the people that are providing these online exposure don't have any obligation to provide liquidity. So what happens if these glory days that we've experienced post-crisis of this bull run that's been unprecedented, what happens when it ends? Are they going to be there?
Right, and I think we see that in even some day-to-day market moves when you start to have this conversation with rising interest rates and what happens that the Fed just not buying bonds hand over fist anymore, and then you're also at the global bank slowdowns as well in terms of purchasing. Are these the kinds of things that keep you up at night when you're looking at the bond market?
I'm an academic, so thankfully
you don't have to do the trading.
It's not as much as my past former life as a trader.
So you were a trader before you got into that. So, okay, finish that, and then I have a question for you.
So things that keep me up at night is that this is wonderful. Now you can trade these ETFs. You can change your exposure. But what happens when all of a sudden, as some quotes are out there, everyone goes to exit, and you can now exit? That's great for investors. That's great for even active fund managers, that they have this ability to do that. But there are potential consequences on the underlying, and that's what my research seeks to highlight.
All right, now here's a personal question. I hosted a panel for Rock the Street. It's a mentorship program for young girls in high school trying to figure out college and internships in the capital markets industry. And one of the things we spoke about was follow your passion. If you're in one vertical of the workforce and you want to go somewhere else, do it. You can go back to, I'm back in school. What made you go from the trading desk to academia?
It always was something I wanted to do.
Right.
It was in the back of my mind, but being in finance, I knew I had to give the trading desk a try. And so I ended up working at Credit Suisse between 2005 and 2010. And towards the end, I started to have deeper questions. I really wanted to look into things in a more nuanced approach. And I think that my thought process was a little bit slower than the trading desk was going, particularly as we went from more of hands-on trading to algorithmic trading. I knew I needed to get a new skill set, and I knew that I wanted to give this a try. And so I took a shot, and thankfully my undergraduate institution, Villanova, hired me back, and it's wonderful to be back, and it's such an exciting place to be because I get to do two things that I love. I get to do research and look at these questions at a deep dive. This paper's taken 3 years to write, where some of the practitioners I'm talking about are trying to get things out instantaneously. So we're really able to dive into the details in a way that you can't do when you're on the street. And I get to teach kids and be around 20-year-olds who are full of ingenious and sometimes silly ideas, but we get to cultivate that.
Well, thank you so much for sharing your story.
Thank you so much, Jill.
And thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter.